Good morning, everybody. Good afternoon to my friends across the pond in Europe. This is the Ticker Highlight Show. However, today we're not highlighting any tickers. We're going to be digging into what to do about this market. I'm not sure why I'm freezing a little bit here, but we're going to be digging into how we're approaching this market, how each of us see the market, what we're watching for. When is the time to buy? When is a bottom? We're going to cover all of that today, and more, and to kind of walk us through what's been happening. I keep telling everybody, options are now the dog, and the stock market is the tail. And kind of proof to that is the numbers that we saw on Friday. We had over 100 million option contracts trade on Friday. Here, I'm going to close one more of these, see if that helps. Yep, that did it. All right. We're talking 15 million contracts in SPY. That's 150 million shares of stock. We're talking 5.8 million contracts in the S&P 500 options. So think about that. 5.8 million times the value of the S&P, which is right now, it's all over the place, 50-60. That is just an incredible amount of dollars moving back and forth. We're reading how much cash people like Buffett and Druckenmiller and all these long-term investors have on the sideline waiting. And then we see things like what happened on Friday with all that huge option volume. Traders were actually monetizing hedges. They were taking money off the table. Traders net got long over the last couple of days, so Thursday and Friday, about 5 million SPX deltas. Now, what does that mean? Just think about buying the S&P 500 5 million times. You're talking about $25 billion. Net bought. Where do you think that $25 billion is going? Do you think it's just going to go? Are they taking it out of the market to hide it under their mattress? Alicia, when you cleaned up on hedges in the floor, did you take the money that you just made selling all those puts? Did you take it home, put it in a jar, and hide it underneath your bed? Or did you put it back in the market?
I actually went and bought shoes. Always shoes first.
Yes.
No, of course we traded it.
Yes, you trade it. And that's where we are here and why some of the action we're starting to see is develop. The news is out. There's doesn't feel like there's a lot of shoes to drop, and only positivity can come out of this. That's why overnight we were down 300 points. And I see in the headlines, where are the circuit breakers? Where are the circuit breakers? Who's asking where the circuit breakers are? People, retail traders, the people that sent Hannah, her financial advisor that sent her that letter to just hold on last week during the middle of the panic, the tone deaf letter. They don't know the breakers. So that tells me that people are getting worried. They're getting really worried. And they're asking, how low can we go? That to me tells me that we're at the end of this panic and that we're now in a position to potentially start, at a minimum, no longer have the 300 point drops every day in the S&P. Probably we're due for a rip. And we may be starting to form bottom. The last time the government shot it, The last time the government shot the market in the foot through its own government action was takes me back to the debt ceiling crisis and debt downgrade of 2011. The sell-off pattern looks very similar. Similar, shooting ourselves in the foot. And that what happened was that did bottom out after a major amount of selling. Then we got a nice rip, chopped around, sold back off, chopped around a little bit, and then we were moving higher. So what does this mean? Banks are lowering their S&P target, end of year targets, things like that. We're at some point going to get a 200-300 point rip in the S&P 500, but I think the V bottom is probably not going to happen. It might be just kind of a chop bottom. So get a little bit of rally, sell back down a little bit, back up, back down, and then we start to kind of really constructively form maybe a slow rally with hopefully more participation from the market, the other 493 stocks in the S&P 500. And so how am I allocating right now? I will tell you, I was buying stuff today. I wasn't Thursday. I wasn't Friday. Today, I am buying stuff. I've bought short-term exposure to the S&P 500. I've bought short-term exposure to the triple Q, and various. I bought some longer-dated calls in Amazon, and if you attended the free Delta Strike sessions we did last week for our 15th anniversary, then you have seen that trade. So that is what I'm up to now. Do I think that we're going straight back to 6,100? No, but we get a 200-300 point rip. I'm going to take my money off the table and kind of look for the next leg. Now, that's what I'm up to. But the beautiful thing about Option Pit is I have 4 amazing traders here, and we all have different approaches, different views, and different lenses in with the way we see the market. So the next speaker, it's going to kind of walk you through what she's looking at, is our own Queen of the Candles, although I just call her the Queen. And she is Leisha J. Leslie, and she's going to give she gives us kind of the levels every day that she's looking at. She and I use these to trade 0 DTE options, and frankly, I use her levels kind of across all of my trading because it tells me where I'm looking to buy and where I'm looking to sell. So, with no further ado, take it away, Leisha J.
Thank you. Good morning, everyone. Mark talked about, are we still going to see whipsaw on the daily moving a couple hundred points? How about 220 points in 5 minutes? That's what we just did.
Yeah,
this
crazy.
candle was 220 points in 5 minutes. That's, you talk about rip your face off, insanity. So I am showing you my levels on the 5 minute, which are holding. This is an important level right here, 49.68, and up here at the top, 52.52. Watch those levels. Now I'm going to show you something super cool that I discovered over the weekend, last night, looking at all this stuff. Now there's 3 things I'm going to show you here when Andrew finishes typing.
Yeah, mute yourself, Andrew.
Three times the Fibonacci has shown a reversal at a 50% move. Now, the first one's back here. This is the weekly on the ES Mini. The first one is back here from the lows of March of 2020 to the highs of December of 21. And that pullback, which occurred here, OC 22, was 50%. 50% on the Fibonacci retracement. That means the market took the bottom here, the high there, When the sell-off came, it stopped at 50% of that rally. Pretty cool. Everybody watches it. This is where ES stopped last night. This low of October 22 to our high of just February 18th. Last night we stopped within $2, $3 of that Fibonacci retracement on ES. It was 48.34 and a quarter. Our low was 48.32. Exactly. Very interesting.
Mute yourself.
Also, last thing, our mini, this is where I got caught. This is where I was calling bullish. Bullish, bullish, bullish. That was a little mini 50% reversal to the upside, and that held. So these 50% on the Fibonacci are levels that the world is looking at. Today, what I'm looking for, change in trend. Right now we have a giant high wave doji, meaning mass confusion. I am watching for a change in trend candle today, holding that 50% right there on the ES, 48.32. Possibly a confirmation tomorrow that this is the change in trend. And I will be watching RSI moving back up above 30. Those will be two positive bullish things. Now, are we going to go back to 6,000? Probably not. No, not immediately. Put this downtrend line in. That is going to be some major league resistance there. On all your charts, all your stocks that have the downtrend, put that line in there. That's what I have.
And there you have it. Now, with his take and kind of an international macro take, is our imperial overlord of income, the future governor of Canada. He is Hans Albrecht. Hans, it's definitely a different world over the last few days. What are you doing in this market? How are you approaching things, and what are you looking at? What's like the one thing you're really looking at?
Well, in the world of income trading, as I've been talking about, stability is so important, right? Quality is important, stability is important. Some of these things that we're going to talk about in my class later on today. And so I think right now you kind of have a little bit of baby in the bathwater thing going on. You're dumping almost everything, although some of the more sort of defensive that I've looked at are doing a little better. But I think what could happen is, and as Leisha talked about, we could see a buy everything rally, right? So when that initial sell-off in a panic is going to be everything. And then the sort of subsequent sell-offs, if things progress as I expect them to, will be a little bit more selective. And so the idea is that maybe we get that growth, we get that everything bounce back, and then you want to kind of shift into some things that can make a little bit more sense given the backdrop over the next 8 to 10 months to a year. And so I think there's still some challenges out there in growth. We were asking Nadella, are you going to continue spending a whole bunch of money on semiconductors and all that stuff on Friday? And he said, well, it kind of depends on GDP. So he's sort of saying, well, it depends on a lot. So I think we're in this it depends kind of market, and which a lot of people need depends right now, I think. And it depends.
I was going to make the same joke. It's better to be a it depends market than a where it depends market, which we were overnight.
I was going to mention that. Is that J&J? They may do well in this market. So I'd be looking at VIX to kind of come down, break 40 with some convincing momentum. I would say right now we're still seeing it above 52, even though we've had a little bounce in the market, still seeing it up there. I think, we've maybe got some things going on in the credit markets. And so there's things are amiss. There's stuff going on out there. And so I'd like to see that VIX kind of come down. But I think ultimately it could be interesting. I've been talking, I think I sent out a video about a month ago to my turbo income subscribers, option pit income subscribers, and I talked about moving into sort of low vol stocks. So I'm kind of looking at things like, Coke, Colgate, Costco. I kind of like Costco, Visa, Berkshire maybe. There's some some really kind of sort of what we would kind of call safer type things, waste management, stuff like that. Not as exciting as NVIDIA and AMD, but the kinds of things that could make sense. So later on today, 1 p.m., my turbo income traders and I are going to be doing a class, which everyone is welcome to look into. It's going to be great. We're going to talk about stability. We're going to talk about some of the things that I'm talking about here. The bad news is volatility is high. The good news is that pays us more, right? So we want to be more selective. We want to be more measured in our approach, but it's paying us a little bit more. So I'm going to be talking about the risk gauges I'm looking at, which of course VIX would be one of them. And what I think can happen, we're going to be talking charts. We're going to be talking setting up those income trades, because when the market's not helping you out, as it hasn't been lately, you need options to help you out instead. And income trading is certainly one way to go about it.
Well, clearly the market agrees with you based on the 100 million options that traded on Friday. And we're already off to a fast start here in SPX today. So lots and lots of fun. Thanks, Hans. Now, kind of to call our cleanup hitter is our resident volatility expert, Andrew T. for Two-Way Trades Giovinazzi. And he's going to talk about the one thing he's watching and dig into the overall volatility markets. If you want to swap to his screen, he can.
Oh, did I share my screen?
I don't know if he did or not. I did.
You know what? I've never done this before.
Oh, here. Well, you can show my.
I got it. I'm just.
Are you just messing with me?
I am. I'm messing. And now the good thing about Leisha, when she bought her shoes, she probably still has them, and she probably has. I can't even imagine. But the funniest story I heard from Leisha, an old friend of mine on the floor. I told her I was working with Mark and Leisha Leslie, and he looks at me and he's kind of an old dog anyway. He smiles like, Lisa Leslie, I remember. Nice shoes. I also know what he meant by saying that.
Good old Joe.
So,
anyway, so okay, so I have SVIX up. Up on the day, VIX up on the day. How is all this possible? And what I would say is we are in severe backwardation. So, which means what? VIX is way up here. The futures are way down here. Vicky was saying VIXI and VXX was halted. Could be for a variety of reasons. Yeah, we need a mean to do the bananas thing. But the reality is the May contract is only 28.06. So you're seeing VIX at 47.72. Just be mindful that these futures are still trading here. And the market is very bananas, but the strange thing about VIX in this state is it's going to move a little slower than you think, because all of the options are based on the futures, and all the future prices and all the option prices are sky high. So what you're seeing might not, because you would say like, oh, wow, you know, those 40, what are the 40 calls trading for? So if you're looking at VIX, right, you're like, oh, wow, those 50 calls are $2, right? Or the 45 calls are $3. You're going to say, wow, those are really cheap, right? Because heck, we're trading 47. So the market is not looking for VIX volatility to stay this high for an extended period of time, even out to April. So looking for, I would say, like downside, like put spreads in VIX, they're going to start to make sense here very, very soon. The reason is this. What happened today that didn't happen? What was supposed to happen? And Mark made a great point. What was everybody like? It was nails going to happen today that didn't happen. circuit breaker.
Yeah,
right?
the limit down. We did not
Didn't
hit
happen.
that at all.
So now the market is starting to get some news coming in. There seems to be some countries, like, again, the market's all going to be politics, all headlines. So the opportunities are still going to come. You just have to be very careful about what you buy, because volatility coming down. Hot Pepper says EU offers Trump 0 tariffs on all industrial goods. Okay. It's starting to move things the other way. I bought some SMH this morning.
Ooh, that's a good idea. I like that.
I sold it for a good price, I don't know, a month ago or 6 weeks ago or whatever. But anyway, I've got some cash. I put out a thing this weekend. You got to nibble a little bit. If you're an equity investor, you can't have the market down 20% and not buy anything. You don't have to buy it all. Again, investing, trading, two different things. And Trading Desk, we'll look at maybe a couple of trades here for SMH based on kind of where the volatility is. So there are ample opportunities to short VIX eventually. Don't feel bad. You're missing VIX going from 46 to 37. It doesn't matter, because the futures aren't going to move a whole lot. The actual thing that drives the prices, not going to move a whole lot. WA says cash is king. Totally fine. Keep all the cash you want. My mother called me this weekend. I go, hey, if you want to sell some of your stocks, sell some. Who cares? Take the money you need for the year and then not think about the stock market anymore. So you always got to do what's comfortable for you. If you're an investor and the market does pull back like this, use some of your cash at some point. I've been doing it for the last couple of weeks. The early buys weren't great, although actually not too bad now. But I haven't been buying any broad market stuff yet. This is the first ETF I bought, besides I think some XBI and IBB on Friday.
Yeah.
So, but from a trade point of view, there will be a lot of opportunity for vol to come down, but we could be in this up and down for a while, right? Oh, mom's doing better. Put it this way, WA, she's doing so much better. Now she's worrying about her stocks again because she might live.
Well, there you go.
So anyway, that's the indicator for you.
Yeah.
Indicator.
Yeah. So when you look at that curve, and folks, you don't need live vol. You can go to VIX Central to look at that curve if you want. And we're kind of looking for that to flatten up, and that's when we're kind of going to get excited about playing in some different types of volatility plays. For now, normally I don't play in SPY. I don't play in I'm playing the indexes, but normally I don't play in a lot of these different ETFs. And like I said, today was a day where I'm dipping in. My whole time. I don't know that it's longer than Wednesday.
This is
what's that, Andrew?
Sorry, I didn't want to interrupt you, Mark, but crazy moves. Like it's like a video game at this point.
Well, we've said it. The rips in a bear market are actually stronger than the dips a lot of times. Maybe not Thursday and Friday, but we will get a couple of nasty rallies. And when that happens, when you build longs down here, you got to take most of it off as a trade. But in terms of investing, is this an area to, I'm not saying chow down, but I'm not saying nibble. Maybe have an appetizer. How's that sound? Get some crab rangoons. All right, or some spinach and artichoke dip, or a bloomin' onion, whatever you want.
Now you're making me hungry now.
Yeah. So we're not just getting the little chef's tasting. We're getting a full-on appetizer. We'll split it. And then we'll get the bread that comes with the meal as well, but we're not ordering the steak yet. That's the point. We're not ordering the steak or the Mushu pork, whatever restaurant you're at.
Olive Garden.
So,
speaking
folks,
of, I got to sell some Portillo puts again.
Yeah. So, folks, I want you to stay tuned and pay attention. While this craziness is happening, we are not going to leave you high and dry. We're not going to leave you on an island. We'll be with you. So check your email, and if you check your email and click the calendar here, the calendar invite here, to make sure that you don't miss the shows on Mondays. But I want you to pay very close attention to your email inboxes, because me and my team, we're going to be here with you all week to make sure that you are not panicking, you're not feeling lost or out on an island, and to answer all of your questions. So again, check your email boxes, because I'll be back with you tomorrow morning until this, and every morning until this craziness is over. All right, folks. So there's our takes on this market. So for Andrew T. Giovinazzi, the two-way trade man, our Hans Albrecht, and of course, Queen of the Candles, Leisha J. Leslie. I'm Mark Sebastian. I am your only option, and we hope you have a great trading week. Stay tuned. I'll be back with you tomorrow.
Bye-bye, everybody.